Hey traders, good evening. It's Mark Owen here from Trade and Train. Just going to give you a little update on why we're saying to stay out of the market right now. So a lot of the charts, especially in the currency world, obviously if you're trading in equities or if you're looking at commodities, there are markets that you can trade. But when we're looking at Forex, most of the charts are coming into critical areas. So rather than just jumping in and taking a risky trade off these key levels that, we see a lot of novice traders that come in, they see it at a support or resistance level and just trade from it. And, it's not a good way to start trading in the market, because what will happen is you'll start taking a lot of losers and it's not good for the mindset. So you always want to see that rejection, or you want to see that break, or you want to see that shift in sentiment. So wait until that happens. So let's have a quick look at some of those markets that are coming into critical areas, and they're predominantly dollar focused. So looking at the dollar index, you don't want to be selling the dollar right now. Just look at the dollar index. It's coming right into our critical ascending trend line support. It's coming into weekly horizontal support, where we've seen price back in August test, come down and break through 92, reject, and then rally back up to 94.70. And since then we've meandered back down towards 92. We've not tested 92 yet. We're not far off it the last week and this week. But we need to see that shift in sentiment before we're going to start buying dollars. We want to see the market change cycle. And before we sell dollars, we need to really see a break below 92 and then some sort of correction. So let's take a look at some of the markets right now that can give us those opportunities where potentially we're going to see US dollar buyers come into the market. So if we just take a look now at sterling or cable as we know it, we've seen the market rally, come up into the highs, and then we've looked at the market and we can see when it's come up into this area. Let me just bring my drawing tool in. So the market, in fact, let's change color. So where we saw price reject this key area here, we saw strong sellers, and then since then we've been operating within a rising channel or a bear flag on a higher time frame. So we could potentially see this market pop down and run lower, but I'd expect to see at least price test in here, and then we could be looking for that weekly or seasonal bear move in US dollars. Right now we're a timing point where we should be seeing US dollar strength according to seasonal patterns, and we've failed to see that come through the charts really. But if we look right now, what we've seen is we've seen the sterling sell off, then we've operated. So this is a pattern within a pattern. We've now got the rising wedge within the rising channel, the higher time bear flag. So what would show us that US dollar buyers are in the market? Well, essentially we want to see the market break down, come through this ascending trend line. We'll see those sellers come in, and then we're going to look for a correction, and we'll trade it down initially into where this pattern starts here. So this is a great place to be taking first take profits, and then second take profits we want to be looking down here, and this would be a great time to be trading that seasonal weakness in the US dollar come towards mid to late December, and we'll be looking then for, or even early December, anytime sort of through December, we want to be looking for the shift in sentiment where we can see that dollar weakness, and that'll probably coincide with the dollar index hitting somewhere along the lines of around 93 to 94. So watching for those structural patterns. So right now we want to see this ascending trend line break, and then we'll look for short trades on cable down towards 131 and then potentially 130, where we can then start looking for that longer term buy. Over on euro, so this is we've had a couple of trade calls on euro, one that we're looking at, and it's very close. So essentially if we just go up the higher time frame, we just take a look at this pattern that we're seeing similar. We can see that the market has rejected that 119s, and then we've been operating in this descending channel, potentially bull flag. So we're looking to see euro decline down towards 116, but ultimately the next trade should show us some sentiment shift. We should see sellers come into the market, so whether that's dollar buying or euro selling. So as it stands, we've got a counter trend line don't risk selling from the highs here. As prices come into structure, we want to see that market change sentiment. So we're going to look for price to drop, and if we just drop down the time frames, you'll see here on the smaller time frame right now we can look for, here's your double top, here's the neckline. Yes, we've seen a break of the trend line, but we've not seen a change in cycle. So essentially we want to see this market break through, and then we'll be looking to get short anywhere around that 1.1850, and we'll trade that down as you'd have seen on those swing lows as initial first target in towards 117.60, and then extended lows down towards 1.16. Dollar yen. So I'm just going to go up the time frames again. So if we just look at the daily chart here, you can see structurally the market has tested not once, twice, 3 times, 4 times now on this descending trend line. Whether we get down here or not is probably going to be very dependent on what happens with equities. If we're going to see a collapse in equities, you'll probably see the yen strengthen. Something to be aware of with the Japanese yen is we've seen commercial entities being large sellers of Japanese yen. So right now, the line here that I've got drawn in at 104 is kind of a warning for me to start looking for any potential shift in sentiment to the upside. So as we see dollar maybe strengthen, or if we see stocks start to rally, then we'll see Japanese yen weaken, and that will coincide with what we're seeing on the COT analysis. So we could potentially see that market turn somewhere around 104 and push higher. However, if price does come down into 103s, then I'm definitely going to be looking for buying opportunities on this market. Obviously, we need to see buyers come in and we see that shift in sentiment, and we'll trade it back long. And I do expect this trend line to break, and we could potentially run up towards the 109s, 110s. So that's something to watch out for here. So the reason, and I'm just going to reiterate why we're saying be careful and stay out of the market, is because everything is so overvalued at the minute, and it's been going one directional, and we're coming in some critical areas where the market will potentially test, break through, and then it's either going to be a false break or that momentum will continue to keep going. One of those markets that has kept going, let's just pull it in, is Kiwi. We're just going to take a look at the weekly level. We can see the structure that's come through here around the 6900s. We've seen it test several times through here. If we go further back, you can see, as Kiwi forms a top, it generally starts to range a little bit. But here we've got multiple tests of support where it's rallied, then broken through, retested, then dropped. We've come back into that same vicinity. So I wouldn't be surprised if we do see Kiwi sell off somewhere back into maybe the 65s. Maybe it won't go that low as we are, as Kiwi will get pulled with equities. So if equities do continue to rally, Kiwi's probably going to break this structure and continue heading up towards 7400. However, I would like to see a correction first, and then I'll be a buyer of Kiwi to run that through into seasonal analysis. Another thing that you can look at would be this sort of trend line here for Kiwi to pull back into, looking for buying opportunities to then run this market. Now today it's probably found its high, and where I'd just be expecting the market to take a rejection. And the reason for this, if I just pull in the pivots here and we just take a look at what we've seen from price, when we generally hit daily R2s, this is it's an old sort of saying, this can be seen as the dead high or the dead low of the day, and price came into that, just went straight through it, and then next thing you know, we've seen price turn around and we're seeing evening star formation. However, it's not enough for me to be a seller because there's no commitment from the sellers at this point. It's just me thinking that there's the dead high of the day. So how are we going to trade this? Well, in simple terms, we need to see sellers come in. We need to see some sort of rejection, and then we can start looking, whether it's a break of a trend line, or whether we wait for price to get through 6800 and then we can start trading it lower down towards 6650. I've marked this on as the last clear swing low, so I'll be looking to see if price can test or break this, or multiple touches at the same point. If we see three attempts are failing around the 6900, then that'll be something for me to start looking at. Moving over to Aussie USD, again, if we just take a look at the pivots, this time what we've seen is price coming into the monthlies and absolutely just testing it to the pip, not once, not twice, and then several times throughout the night and today. So what's our objective and what are we looking for here? Well, we know that Australian dollar has a seasonal bull period through December. Now that can continue into January, but what we're seeing is that with seasonal bull period right now as USD, and we've not seen that quite move into the charts yet. Everything is a little bit top heavy. So if you are a trend trader, I'd be saying, right, wait for the market to correct. It's too heavy to be buying right now. Wait for the market to correct and looking for these key areas in and around 71 to 70.5. And you can see how price reacted here. You know, we've had a bullish market, we had a correction, we've broken out. So this is a bullish sign. And now we're looking to see if the market can pull back. If you're a day trader, then obviously what we're looking for is price to give us that clue that the market's going to move lower, and then you can start trading that shorter term trend in towards that 7100. If you're a trend trader only, you have to wait end of day down here, or the market has to break out of these highs, keep pushing higher, and then you look to trade a higher low. Okay guys, that's probably enough for us to look at in the FX world right now. I'm going to head over and just take a quick look at the index, because this is where the markets have generally been dominating in terms of, you know, vaccine news, what's happening. You know, as the news came out, we spiked higher yesterday, and it's interesting how the news always, well, the first set of news came out on the Monday after Biden was announced that he was going to be the new president of the US, and then this Monday again we've had another vaccine news, and we see that big spike. Whether it's a pump of the market, who knows, but we are seeing it. It's come straight into monthly R2s, and then, you know, today we've seen the market settle down a bit. But really, to be a buyer of these indexes, I don't like it where we currently sit. I'd much rather see price declining and giving us a nice little correction before we could look at taking a next long trade. So somewhere around here, if price can come back into this sort of trend line area, I'd happily look for getting long the markets again. But I'm not going to be trading this where it currently sits. If we look at the S&P, well, the S&P, if we look at the highs over here, it shot to new highs on the news of the vaccine last week, and then right now we're still sitting within that range. So yes, we broke the highs, it spiked through it, but then we're still sitting within the range of that candle from last Monday. Ideally, I'd like to see the market pull back a little bit like the Dow. Whether it'll pull back down towards 3250, I think that's maybe a little bit optimistic, but I would look for longs from this area. The Nasdaq, on the back of the vaccine news, has been hit a little bit hard, and that's predominantly down to that maybe normality is going to go back, people back to work, etc. And that will impair a lot of the tech stocks in terms of the growth that they've experienced since. And if you just look at it, the growth that this sector's experienced, and especially some of the tech stocks during this period. Now, if you then look at maybe something like Zoom since the announcement, you'll see that it's fallen back about 33%. So, you know, these are things to think of, how the markets or how the currency markets are affected by indexes, you know, looking at that risk on, risk off scenario. If that's something you're not sure of or would like more information on, please make sure you give us a shout. Drop a comment in the text below, and we'll happily reply. If you are following us on Telegram for free analysis, well done. If you're not, I'll put the link in the text below. So traders, have a great evening, and we look forward to giving you an update in the markets at some point tomorrow. Take care. Bye bye.